What's going on, guys? It's Nick. Today I have a live video for you. It's about the algorithm. This is a Zoom chat with a bunch of current algorithm members. I open it up to let them ask me questions. I think watching this is going to help you get a lot of your frequently asked questions out of the way. It's also going to show you more in depth how to use the algorithm. So you're going to find people who are on the same level as you, so beginners to intermediate. And what that's going to do is put you in the same shoes as them, have them answer and ask a lot of the same questions as you. And I think this will be an excellent benefit for you to watch the entire thing. Let's get started.
Trading this system, right? Real simple. Basically, you want to start on the 15-minute time frame, look for your setups. Just hover your mouse over the lines. Everything that says, week and month or better, month and week. If you hover over it and it says like daily line, for example, just don't even bother with it. This is a monthly and a daily line. Anything with D1 associated with it, don't even bother. So this is basically telling us this is a low support resistance. It's a month and a day. It gives a price, right? If you hover over any of them, you'll see the same thing. This is a high support resistance. That's a year and a week, so that's a strong level. Price is on a month and a week right now, where it is now. That's a strong level. So what you want to do, drop down to the 5-minute chart, and as long as price is staying above this line, you would make the purchase. So USDJPY is giving us, for example, a buy signal right now. Our expectations for this, I'll actually draw it out. Price comes down, touches the level, breaks it, comes up above, importantly, touches it. You can see right here it holds. Price comes back up, touches the line exactly, and it holds. Our expectation is just going to take off. Your take profit can be somewhere in this category. Take profit can be up here. If you're not paying attention or you're not actively trading, just set a quick take profit. Take profit 25 pips. One of these lines. One of the biggest things I like to mention is you want to count. You want to count for your spread. Your spread or your ask or your bid is the difference between these two lines. So this little area in here where price is, you have to adjust for that. So if you want to take, put the take profit here, you have to think about this spread and how big a difference this is. So, it's basically a difference of what, 1 pip. So you would just put your take profit slightly lower, slightly lower down here, something like that. Just so in case it does touch that line, it does take you out the profit. Now, as the trade progresses, you want to have a stop loss. Your stop loss can be tight. I like to say 25 pips. You can do it tighter. Some people like to do 6. Some people like to do 12. If you're playing with some exotic pair or something that moves up and down really quick, you can do up to 50. It's really up to you. You can do market structure. You can say, I want my stop loss right here because it's below this recent low, whatever it might be. And this, for all we know, it could be 35 pips. It's based on your strategy. I can't tell you the perfect answer. I can't tell you the best stop loss to have because the markets move in all different ways, all different shapes, all different directions. On a trade like this, USDJPY, it's a pretty safe bet using 10, 12, 15, 20 pips, whatever it might be. Because if you want to measure it out, you always take your mouse, press the tool up here on the left, bring it down to where price is on your bid line. Bid line's the red. Bid line's the black, rather. Ask is the red. That's the difference between price and what your broker makes in commission, in case you're wondering. You just drag your line down, and you can see, down here is, it says 192 there in the middle. It's not actually 192 pips. It's 19.2 pips. So it's 19 pips. Even dragging down here to the very bottom, 228, that's not 228 pips, that's 22.8 pips. So my lucky number has always been 25 pips. As far as like statistics go and stuff like that, anything that goes 21 pips after your entry is more than likely not going to turn in your favor. You know, if it goes 21 pips, it has a high probability of going further, whether it be another 20 pips, 30, 40, 50 pips, who knows. The issue with the Forex markets is people think things are just going to go straight up and never stop going up. It's not the case. The markets like to fluctuate, they like to go up and down, left and right. And you have to, you know, just as fast as you get into a trade, you also want to get out, you know. So as you can see on a smaller time frame, like the M5, 5-minute time frame, you'll see price really just likes to play around. So you can see there's not a big range between here and here. It's not that big of a range, and it just goes back to another range to where, you know, it plays in the same range. So it's not like price is just taking off and just going up forever. It really takes its time and takes a long time to actually get anywhere. So there's no shame, there's no problems or glory of, you know, just taking profit. And that's one of the hardest things traders deal with, is this idea of FOMO, which is fear of missing out. It's A, getting out of a trade too early, B, regretting that you got out of a trade too early, and then it's C, watching a trade take off because you took out too early. And then there's also the opposite, which is staying in a trade for too long, increasing your stop loss from 25 pips to 50 pips to 75 pips to, oops, I blew my account. And there's also not knowing when to cut your stop losses and, you know, watching a big amount of profit. You know, you have all this money on the table and you don't take it because you're greedy. Oh, wow, I'm up $500. You know what? I bet it can go to 1,000. And it shoots up to 600, 650. Then it plummets down to 200. And it never comes back up again. And then, you know, you take 200 profit, or you hit break even. If the money's there, just take it. There's a million different trades with this system. You know, if you took this USDJPY buy, you'd probably be a pip or two in profit right now. I can't tell you how long this trade is going to take. I can't tell you if it's going to work out. It just depends on the markets. It's 12:22 a.m. for me, Eastern Standard Time. Not much going on. We're at the end of the Asian session. You have the European markets at 2 a.m. You have the London markets at 3 a.m. Then you have the New York Open at 8 a.m. and then the stock market open at 9:30 a.m. So you have a lot of different factors, a lot of people changing desks, switching views, because although you're looking at the chart, so are other people. And the people from Asian session are going to have a different opinion than the people in London session. That's why people try to trade, oh, like, you know, the London breakout, something like that. What that really is just different views of the chart, and then a pattern or a bias being predicted, and then price moving in that bias. So in between sessions, you're going to see price fluctuate. One of the most important times for price to fluctuate is when a candle closes. When a candle closes, it's kind of like price makes its last decision. So it has to paint whatever it's going to be painting. You shouldn't be trading candles that are not painted. So an example for that, if, for example, this trade wasn't developed just yet, and you were looking at specifically this candle, right? I can't even too fine of a thing. Let's do this. You were looking specifically at this candle, right? This little white one in the middle. Oops, getting there. You know what I mean. You're looking at the very first white candle, and you're making your trade bias off of it. That would be an error. What you would want to do is to wait for that candle to fully close before making your decision, because just as easy as that candle is showing that it's holding the support, it could also, at the very end of the 5-minute, because we're on a 5-minute time frame, it could very just as easily just drop down below and actually close down here, right? So now your bias would be, all right, now it's a sell because buy above the line, sell below the algorithm line. And the biggest thing is making sure it's a relevant line. Hover your mouse. All right, I got a week and a month. That's an important level. Wow, much more important than, we got a day and a week and a day. Forget it. Forget those lines. It doesn't matter. Look for the strong setups. Look for the good trades. Wait for your confirmation. The biggest thing is acknowledging that the level is being held. The level is held. The level is held. The level is held. The level is held. And then that's your confirmation. I've taken out the currency strength indicator. I've taken out other lines. I've taken out other indicators. I've really try to make this as super simple as possible for you guys, because it might work for me, but for you it might be different. So I think just give you one task to focus on would be the easiest and the best thing to do. I had a lot of students who like, all right, but the currency strength is this, and what do I do now? And oh, but price is moving down, the price is moving. It was just too much for you guys, and that's fine. This works just bare bones. That's how strong this algorithm system is. And as much as I want you to use the original algorithm, I want you to spend a lot of time and focus on the trade scanner. And the reason I say that is because this is more dynamic. It's going to recalculate these lines. It's going to be always a current trade. Whereas the yearly lines, throw them on your chart. You're going to notice they don't move. It's a yearly level. You can't really fluctuate with the yearly level versus, say, a monthly and weeklies and yearlies lining up. You have a lot more variables, a lot more strong points in the market that you won't see with the original algorithm. And this tool essentially utilized any market. It will allow you to find setups during Asian, London, European, Australian, although you shouldn't trade the Australian market. New York session, whatever it might be, it's going to give you more opportunities in the market. So you'll never be in a situation where you just have no trades. It can happen. And in situations like that, my best advice is to just not force anything. Don't force a trade. Don't just, oh yeah, like we trying to jump into a euro dollar sell because you're like, oh yeah, it's definitely going down. You hover your mouse over it and you're like, yeah, it's a daily and weekly level. I don't care, now we're in level, so I'm just gonna sell this, and that's absolutely the wrong idea. That's not how this tool works. It's not, jumping the gun and I really want to trade. I just have to do something. It's not the system. It's not how the setups work. Scanning through a lot of pairs, you're gonna see a lot of things that already happened, right? So this is an important point right here. Price crosses over the line. If you hover over the line, what do we got? We got the strong, we got the weak line. It's the weekly and the daily. We're not even supposed to look at it. The thing with the weekly and the daily, sometimes it works, but it's just not worth the percentage where it fails on you. I wouldn't want to see you guys lose because you're, taking these lower probability trades, but in this instance, it works out. This is a good example of how price crosses over the line, holds, tests it again, and then takes off. And then once again, crosses over the line, holds, tests it again, and then, more than likely, where is this going to go? You would say, this is probably going to go up. But the issue I have with this is, you hover over it, you got a daily and weekly line. Who knows? The probability is just not there. You want to roll the dice when the odds are in your favor. You really just don't want to get caught naked because, you're lazy or you're quick to trade or your mentality, whatever it might be. A weekly and a daily line, this is the easiest way to scan through your charts. As much as you have this alert, you should also be actively searching for trades and stuff like that. This is convenient, but it also can become, stuck in the background or just really, chaotic at sometimes, especially during news events where it just bing, 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 keeps flying through different levels because, price is touching it. I trade all pairs, nothing exotic. The most exotic pair I trade is GBP JPY. The reason in my opinion, GJ's exotic is because it has a high spread. You'll see this red and this black line. They're really far away from each other. Basically, it costs a lot of money in commission and fees to trade that pair. And also, the other problem I have with this pair is that at one point it'll be going up, and then out of nowhere it'll just dump down. It's very volatile. You call that volatility. And one of the issues with the dragon, which is another name for this pair, riding the dragon, is that it'll catch you off guard very often and just spike downwards or spike upwards faster than you can react. But here's another good example of a potential trade. But you hover over it, you see the day and the month. So we're not going to trade that. We're going to actually avoid that. So even though overall the trade is looking good, you just don't want to use that level. It's not really that strong of a level. Even though price is crossing over here, holding again, holding again, you just really can't make a true concise decision if it's going to go up or down. It's just not fair for you to try to take that risk. There's plenty of other trades, and there's no reason to get greedy once again. This is kind of like a way to train yourself mentally to avoid bad trades and focus more on good trades. Now, coming up here, we got a day and a year. Once again, we got a yearly level, but we're factoring in the day, so we're not going to trade that. Earlier, we had a week and a month. That would have been a great setup. We can see the transition of price here. It touches here and holds, and then from there, it's pretty much never seen again, which is a great setup. This is awesome. That would have been a great sell at any point. Ideally, you want to get into the trade somewhere near the line, within 5 pips of the line. So anywhere within this range would have been an okay trade. And then setting your take profit could have been just using another algorithm line. So you would have hit that line. Your entry could have been, anywhere near here. You would have seen this been developing. Could have measured out your potential profit minus spread. You're looking at 55 pips. That's an entire day trading for a lot of people. And if you just utilized one trade, and it pretty much went straight to profit. So you can really, once again, just complete your day really quickly. I know a lot of you guys are busy people. You don't have a lot of time to trade. Well, guess what? We're on the 5-minute chart. We're playing around with, I don't know, what would you call that? 15, 20 candles. So we're looking at what? About an hour and a half worth of trading. And you're done. You're done for the day. That's it. What I like to do, I like to just scan through all my pairs, playing around on the, the hourly chart, 15 to 30, whatever it might be. Each chart's going to tell you a different story, but it doesn't really matter because our story is the algorithm line. A lot of traders get jammed up because, they're just trading based on technicalities and, trends and lines and moving averages, even moving averages, RSI, whatever it might be. Every time frame tells you a different story. The reason the algorithm works is because every time frame tells you the same story. Here's alt NZD, weekly and daily lines, no good. Looking at the daily and yearly, once again, no good. Come down here, you have the strongest line in the book. This is an absolute crowd killer line. You got the yearly, the weekly, and the monthly. That's an insane setup. If you see that line, you should be going crazy about this because it is an absolute gold mine for the most part. So what happens here step by step is price crosses above the line, and more importantly, price crosses down and touches the line one time and then a massive move upwards. This is more likely a news event, but once again, price jumps down a little bit, fine. You probably would have been taking profit already, to tell you the truth. But if you didn't, price crosses the line, touches it, holds, takes off, and by this point you would be at the very top of things. You're looking at it once again, 48 for 950 pips minus this massive spread. You can see it has a huge spread on it, so it'd be probably more like 40 pips, but still alt NZD they would have been a really, really decent profit for the day. And once again, 2 trades, you could have been up 100 pips. On a 1 lot, you're looking at $1,000. On a 10 lot, you're looking at $10,000. It's really not a hard thing to do based on leverage, bonuses, and your risk appetite. Because once again, what is your real risk here? If you made a perfect entry here, for example, or say you screwed up and you got it up here, what is your real risk here? Honestly, 8, 9, 10, 12 pips. 12 pips. Yeah, that's it. So you could have risked, a 5 lot trade on a 10 pip, for example. That's a $500 risk. You risk to return would have been 4 to 1 because you would have made 40 pips and you'd be up what $2,000 approximately versus risking 500. I think that's a pretty good deal. And you spent all this time just focusing on this one trade, and that's all you need to do. My biggest plan of advice, my biggest plan of attack for the markets, sit on your hands. Literally put your hands underneath your legs and just watch the lines. Just watch the lines, let things develop. And when you see things go as they should, price crosses over, touches and takes off, that's when you know to get in. If that's not happening, you're sitting on your hands. It's kind of like fishing. You got to wait for a fish. It's called fishing, not catching. This is an interesting spot. Once again, daily and weekly. So you're going to try to avoid that. It looks good. Price crosses over, touches. You could take the sell if you're feeling frisky, but I just feel like you're going to get thrown around by this pair, Euro CAD, because you can see the high spread on the pair, and you can also see that it's not a strong level, even though it looks like a good technical setup. This will be, when you start screwing around with your time frames, and the higher time frame looks, it kind of looks like a sell. Then you go to the 4 hour, and you're like, what the heck's going on here? And one of the things in general with trading, I just want to point out, is that if your charts look like this, and it's just something crazy like that, what are you really expecting to trade here? This is not a clean, concise move. This is chaos. This is not where you want to be in your trading career. So in general, on a higher time frame, if it looks like that, traders beware. You're just going to get whipsawed out. You're just going to, you think it's going one way and it's going to go the other, no matter if you're buying or selling. So it's almost like both buyers and sellers lose. Here's a good level, a month and a week. One strategy you could do here is using this little tool, and you can actually try to get in on this trade, say it was to pop up. So you can measure your spread here, which is pretty far. In my case, it's basically like a six pip spread. So what I could do here is measure the bottom line, come down 6 pips. I'd make it 7 or 8, maybe even 9, who knows. Then you right click trading, put like a sell limit here, for example. And then from there, you just configure your stop loss. So it would be 6 points plus, for example, whatever you want it to be. So this is 20, so it could be 25 pips, for example, and you could be safe. And then your take profit. Typically, on trades like this, I like to keep it open, but if you're not paying attention to the markets, just set it to a recent low, something, in this case, somewhere between 35, 25, 57 pips. And, if price does end up coming back up, pushes quickly up to here, you're actually going to get into the trade at the most ideal price, which is here, because you've accounted for your bid and your ask. So you won't miss the trade if it were to even spike up to where it previously spiked. So that's important in setting limits and for buys and sells. Just keep that in mind. It's another strategy you can use. Is if price is not near the line, you put a limit by the line, and you just account for whatever you have to pay your broker. It varies. Just use your noggin. Be smart about it. It's only usually a couple pips. On JPY, looking at this pair, you got the monthly and the weekly. It's a strong line. We have price breaks up and holds, and holds again, but here it breaks down. Basically, you kind of want to sit on your hands for now, because what you're expecting is price to touch here and then come back down, and then potentially even touch it again, and then that would be your confirmation for it to go back down, probably somewhere here, or it could extend even further, down to somewhere, some sort of structure like that. I don't know. If it's not clear, if it's not obvious, then why even risk your money? Just think about it. You need to make winning trades. You don't need to make losing trades. You need to make winning trades. And if price is playing around, and you also have strong levels above a strong level, there's no reason why price will not go investigate things. So price might break up and test this out. So this would be a losing trade, especially if your stop loss was, say, like somewhere over here. More than likely you're going to lose a winning trade. Whereas if you were patient and just let price push up, took the sell here, and you had your stop loss up here, you would have had a lot more potential to have a winning trade. There's something to keep in mind. But once again, you're really just sitting on your hands here. You're waiting to see how price reacts. You really want to see this clear break and touch and play around and touch again, and just confirming that this level is actually going to hold as a whole, and that it's not more interested up here and it's going to check out here and hold and touch and then finally drop. But that comes with time. Obviously, we're on a 5-minute candle chart. You're looking at potentially anywhere from 5 minutes to a couple hours to where this trade could just be in consolidation until it decides to make a decision or a test of a line, something like that. Let's see. I trade a lot of different things. GBP NZD. I don't know why, but this pair barely has any lines. They're really always far away for the most part. It takes a long time to get to them, but when they do, they're usually pretty solid because there's really not much else to look at. And these will adjust as time goes on, and obviously the indicator adjusts every few minutes or as price moves, makes highs, lows, stuff like that. Same story for Euro. CAD JPY has been pretty decent to me. This is a pretty strong level. Week in a month. Once again, you'd want to try to get into this trade by accounting for your spread. So we got about 3 pips here. So you would take on a buy, you would take the top line, count for 3 pips, make it 4.5. Right click, trading, drop the buy limit. Biggest thing, make sure you set your stop losses. It's real simple. You can just double click it, modify it, put a stop loss in 79 point. Well, we can do some math, right? I'm going to have it tight, 79.4. And then modify. Now you got a stop loss. You can play around with that. Put a take profit. Use that line, this line. Remember, hover your mouse. Day in a week, day in a month. Who knows? It could go up here. It could go down there. We could play it safe. We got 79.948. Remember, you have a 3 pip spread. Double click your green line. Take profit. 79.95. We'll call it. And that kind of counts for your 3 pip spread. So in case it does spike the level again, price likes to repeat what it does in the past. So like spiking the level, something like this. Not be out of the territory, or it will make a move back downwards or something like that. Get rid of this. Get rid of that. Cool. Delete. And I think I have a couple more pairs left. Odd CAD. This was a good setup. You have the month and the day, so it's kind of tough to make a trade off of to gamble. Day in the month, week in the day. This is probably more than likely just a news event. I feel as if a pair moving like this strong consolidation, just consolidating, and then just like making this quick break above the line, and then just like a massive move up like this is not particularly normal. Generally indicates some sort of economic event. It's not how the markets particularly move. For example, this is how people take weak traders out of the market. They spike it high, they spike it low. It might not be that big of a move, but if you measure it, it can actually be pretty catastrophic. We're looking at 32 pips. Remember, we're using this tool, this algorithm tool, as a means of being in the market only when it counts and being out of the market. This means you're reducing your risk, reducing your exposure to the market. A lot of swing traders have to use large stop losses and small lot sizes because they have to deal with these massive moves. Whereas us, you can use a bigger lot size. No joke, you can take a $200 account and drop a one lot trade. And as long as you make it within that 20 pip buffer, because obviously one lot is worth $10 a pip, you have a $200 account, you can play with 20 pips. You could potentially, if you go 50 pips positive, now you have a $700 account. You just went up massively in your account size with what is realistically a small one trade with very low drawdown. So try to utilize the tool in that aspect. That's how I make my big trades. That's how I go from a small amount to like $10,000 in a day. It's picking and choosing those quick little trades. News event or just chaos, who knows? It's kind of like this stuff over here. You just don't want to be part of it. If the charts look ugly, then just leave them be. Let them even out. It's a daily and weekly level. We don't even care about it. So moving on. Back to USD JPY. Still looking good. Once again, you're getting your confirmations in. Confirm, confirm, confirm. And you're still, hovering in profit or at break even. But that's all I have to say for now. I'm going to open up the chat for questions, for if you don't understand something, I can go over, answer questions. I hope I explain things pretty well here. But you can either unmute your microphone, you can type in the chat. I think there's a way to type. Yeah, here we go, chat one. Can you check the odd JPY? I think we covered it, odd JPY, yeah. It was a risky, the weekly and the monthly, and monthly and the weekly. This was, we were looking for the sell, right? So we're here, price drops, tests. What's the first test? It's two options. We saw a strong level above it, which could give us a little bit of an issue, which was this level. But this level could also hold. Once again, the strategy here, sit on your hands, wait to see what happens. But yeah, any questions, concerns? You have a little chat room, you have your microphone, whatever you want to do. Andrew, I know you got a question.
I'm good. It makes all sense, though. I'm good with
This is a kind of like a different take on things. Were you able to get to your chart to look like mine?
Yeah, I did. Yeah, I don't know. I'm just gonna start rolling with the M15 for a little bit and see how it goes. So.
Yeah, absolutely. Like I said, looking at the overall trend, looking at currency strength meters, looking at whatever it might be, RSI or oscillators, SMAs, EMAs, it's all just going to confuse you. Those indicators are based on really, really old mathematical equations. Yes, math is how you prove something's true, but the issue is all those indicators are lagging, and those indicators are most effective on higher time frames. I come from an investment banking background, and when we look at the hourly charts, the daily charts, large industry companies laugh at that. They're literally looking at one candle, and that one candle can represent 6 months. So their RSIs, their moving averages are much more likely to be correct when they cross. But remember, these big banks are making 6-month, 1-year, 5-year plans where their stop losses are massive, and their equity in the market can be, for example, like a third of the entire market. So once they make the decision, that's pretty much, decision in what the market's going to move. Whereas us, the little fish, we're kind of just grabbing onto the tails, and I've figured out a way to kind of beat the markets by just calculating these important points and giving us an opportunity to profit like they would.
It's crazy. How long did, if I may ask, how long did that take you to create like the algorithm and everything?
Sure. So it was a 3-year project. I'm actually I started off as a business major. I got a bachelor's in business. Then I went back to school for 6 months. I learned how to be a software engineer. I got a software engineer certification. And then I just learned MQL4, which is the coding language that MT4 uses. And I was able to, over the course of what turned out to be like 2.5 to 3 years, develop the M15. Within the first year, I made the original algorithm, and then it was just kind of too slow for me. And then I was like, let me make something more dynamic, something that's gonna, the lines are gonna move around. They're gonna give you alerts, stuff like that. And that's how the M15 was born.
It's crazy, man.
Lots of trial and error, and spending lots of money too. Consulted a lot of people, and had a lot of help, stuff like that. But in the end, I think it was definitely worth the value that it provides everybody.
Yeah, for sure, dude. It's a good deal.
All right, Lisa, I know you're here. You definitely got questions.
Just technical difficulties.
Just what?
Just having like technical difficulties with the scanner, and
Okay.
so I haven't been.
What is it something you want to solve one-on-one, or do you want to have me try to solve it now?
I mean, I don't want to take away time from other people's learning, but
All right, no worries. After this is done, I'll reach out to you, and I'll do a team viewer, and we'll sort it out for you.
okay, thanks.
No problem. All right, Abdul, you've been asking for a long time now. It's your time to shine. I know you're in there. All the questions I forward to the group, mostly yours.
Yeah. Hello everyone. I'm actually have a question about the candles. Is
Yeah,
actually the shape of the candles influence the chart, how it moves.
sure. So you've got a question about the shape of the candle.
Yeah.
What do you mean by that? Like, are you asking what the shapes mean, or if different shapes mean different things? Or are you confused and like your chart looks like a line, or it looks like this little Chinese pattern, and you're trying to get the candlesticks?
Oh no, it was actually those candles, because in my setup it's actually the same thing. But what I mean is that what is really mean when the shape of the candle is different, because it's always different. Like sometimes you're gonna see some shape who are going up, like the one that you were showing, and others you're gonna see it's completely closed, there is nothing on it. Uh, when this happen like that, what can we expect?
Sure. So I think that goes to price action and price action theory. If you're wondering about candles, what they mean, some basic general information is if you see For example, in my case, my black candles are price going down, my white candles are price going up. Now you have the body of a candle, which is, for example, this black one is the top and the bottom of where price has ranged. Then you have the very tips of the candles, which are wicks at the top and the bottom of the candle, that show exactly how far price went but did not hold. You got to do a little research. There's a lot of information out on the net. I recommend, if you want to learn about candles, stuff like that, I recommend naked trading. That's where I started. You don't have to worry so much about the shape of the candles when you're using the M15.
Okay.
But it is good knowledge for price action trading, structure, and looking at the market patterns overall. Because you're right, the candles do signify different things, right? For example, this is a typical naked trading candle right here. This one right here is called a kangaroo tail as far as naked trading goes. It's a long wick with a very tight candle body. It signifies a buy in the market. And you can see price actually went up, which is interesting. You'll see a lot more of this stuff on a higher time frame. So if we went to the hourly, you could easily pick out a million different candle patterns that you can learn about. One of the quickest, dirtiest ways to do it is I would Google like a candlestick pattern chart, and it'll just show you all the different setups. There's a million different ones. I've always focused on the big ones. My biggest ones are, once again, these naked trading candles, which is another kangaroo tail. Shows, it's wicking to the top, small candle body. It's going to show for a sell, and as you can see, price does move down. You also have, common things called like dojis, where it's like the body of the candles in the very middle. Then you have wicks going up and down, which typically signify a change in price, a change in direction. It's another doji. There's a lot of different ways of interpreting it. This candle, for example, this big one, really is just doesn't really tell you much, rather than just, hey, there was a news event. The best way that I've looked at price and candles is that they're telling a story. If they're full-bodied candles and they're moving downwards, it's telling me the bears are winning. It's a lot of sell pressure. And then when things start going, for example, sideways, it's telling me, price is starting to struggle. And then when things go upwards like this, it tells me a strong buying presence. And then when things start getting, long wicks, throwing wicks to the high, they call it, it signals to me that there's going to be a change in direction or a change in sentiment. You can also get really confused. For example, let me get rid of some of these arrows. If you're just trying to trade price action, which is fine, you can get really tossed for a freaking loop, because right here is like your typical like cross doji, and that signals a buy, and then it's confirmed by two buy candles. But here's the issue. There's no confirmation or any heads up that price is going to move down. And then for the next, like 9 hours, price just was flying downwards. So that would have been easily a losing trade. So it can get really confusing trying to trade just the price action, stuff like that. For what we use, you're on the 5-minute chart, so you can't even really count on the shape of the candles. I wouldn't even consider it. At the very, very best, I would consider like a short trend line. I'm waiting for trends to break. I like to draw those out on shorter time frames because it can signal a change in price. Something like this, see if it holds or see if it breaks. But for our training, I wouldn't really worry too much about the candles. I would just make sure that you're seeing that the candles do something that's related to the line. That's your biggest thing, is just watching them touch the line, touching below the line. For example, we sat on our hands here, and it was the right move, because right now price is moving upwards. It's moving upwards above this line, and it's not looking too pretty. Price more than likely will go check out this before it makes a decision. that's all you really need to know about candles. And if you want to know more about them, it's just learning and practicing and studying, essentially.
All right. Thank you.
Hmm. Absolutely. Does this version of the algorithm seem a lot easier to you versus other versions? Like the way I've set it up?
Yeah, it works very good.
Cool.
Yeah.
Definitely, right? So it's a lot more clear, easier to see, stuff like that. Okay, so we're looking at a sell on all JPY, but it's kind of, it's not far above the line, but it's above the line. And then we're looking at a buy on USD JPY. It looks like that's starting to develop. But like I said, it's going to take a while. We have a pretty decent amount of consolidation above the line, luckily. But it even, if you drag it past that, you're looking at this pretty decent area of consolidation. So it might take a news event or some sort of pressure to move things out of this territory. But definitely expecting USD JPY to go upwards. My take profits for this trade would be here. So like 106.7, somewhere in that category. And if you're going to sleep, it's like 106.3, somewhere in that category. USD JPY is notoriously short spread, so you shouldn't be spending too much money on paying your broker to trade USD JPY. We are having as of a minute ago, we closed a 4-hour candle. That's my favorite candle to watch close when I'm trading price action or if I'm expecting price to move or volatility, anything like that. My biggest candles, the 4-hour for me, it's 9 p.m. Eastern Standard Time, and then it's 1 a.m. Eastern Standard Time. And then the one after that would be 5 a.m. Eastern Standard Time. You'll see me call a lot of signals in between then or make a lot of moves on the copy trader because it's true. Look at USD JPY. It hasn't really moved. And then within the past 5 couple minutes, it's starting to make a change in direction. So that's like an ideal time to get into a trade before the 4-hour close or at the 4-hour close because price is going to move around. It's going to actually do something. But yeah, that's pretty much all I got for this session. That's your live training. That's your live signal. It's basically the basics. Most of your questions, if you got more questions, feel free to reach out to me. But yeah, I hope this was helpful. We'll do it. I plan to do this every week. Try to get all you guys in here. There's a lot more than just you guys. I have a lot of people that purchase the software through email, and they purchased it through this group, and they're just not active. This, you see 16 members. It's not actually 16 members. It's a lot more than that. I've tried reaching out to people. I want to have like active users in here, not just like passive people who, whether they're just not trading or whatever they're doing themselves. I want to make this like an active group. So to be in here, you have to kind of like participate, so it gives you guys incentive to learn with each other, to help each other out, to join these sessions, ask questions as a group, and really get the most bang for your buck and really get to learn this lifetime skill. Because I do think you all have a ton of potential to make a ton of money, and it's really clean cut, really simple, no tricks, no gimmicks, nothing like that. And hopefully you all can be just as successful. I know Andrew's currently a top student, and I think Gil is slightly behind him. So we'll see how it plays out. I have a lot of faith in Lisa. Abdul, you're right behind. You just got a little background information to learn, but that's all right. We'll get you there. And yeah, it's gonna be a good time. Tell your friends. I don't know, something. But yeah, I think we'll call it at that. If you guys want to rewatch this, or show your friends, or if you miss it or whatever, you didn't understand something, you want to go back, if you put it on YouTube, probably tomorrow. It's like 1 a.m. for me, so I'm going to knock out. I'm off tomorrow, so I'll catch up with you guys then, all right?
Sounds good.
Cool. All right, guys, I'll catch you later. Thanks for coming.
Sounds good.